Here's the cold, hard truth. The write-off you just justified, it's not saving you money. It's still costing you real cash. You'd be shocked by how many business owners blow thousands of dollars chasing tax deductions, thinking they're being smart when they're actually draining their profit. In today's episode, we're breaking down what a tax deduction really does, why your CPA probably isn't stopping you, and how to make smarter spending decisions that don't just help on your tax return, but actually grow your bottom line. Welcome to episode 3 of Unfiltered Profit. I'm Seanna, and I'm here with Caitlynn, and today we are going to talk about when write-offs become rip-offs. And boy, are we excited to dive into this one because TikTok has blown this up for our industry, and we're here to kind of set the track record straight of what this really looks like. And you will probably hear about this in almost every episode that we have from here on out in some way, shape, or form. Okay, so let's talk about one of the biggest myths in small business finance, the almighty write-off. Because there are a lot of people that are treating tax deductions like it's free money. And guess what? That is probably one of the fastest ways to drain all of the cash out of your business bank account and feel like your business just does not pay you anything.
Without a doubt. Every time I hear write-off, all I can see now, though, is Schitt's Creek when David was like, it's a write-off. And I don't know if you've seen the show, but
yes.
Oh my gosh, it cracks me up every time because that, to me, just is what people think of when they think of write-offs. It just doesn't make something free, and I think that's somehow what we think it does. But if you're spending $1 to save taxes and your tax rate is not 100%, like that just doesn't exist in the United States right now. We do not have a 100% tax bracket. So at most, right now, 37 cents, 37% is our highest. So you're spending $1 to save 37 cents and you spent the other 63 that maybe you could have used for something else. It's just wild to me.
Yeah, that is not savings. That's just spending and getting a little bit of a tax discount on it. And people make financial decisions based on that thought process. And it really is backwards.
They do. Every December, it's like, what do I need to spend in order to not pay taxes this year? Is like all of the money you made. You have to spend all of that if you want to pay zero taxes. But how do you feed yourself? That's not going to work.
Yeah, that's with our background with military life, that's some government thinking right there of like, oh, I've got a budget and I need to spend it all right now. Here's 20 TVs.
Oh my gosh, all the TVs. Don't go auditing the pilots. They'll have a lot.
Okay, so let's talk a little bit more about what a write-off really is.
Yeah, so write-off, I think, is kind of that current event name for it, time. I like deduction. I think it kind of makes more sense because what it is an expense of something that you paid for your business that will lower your taxable income, but it's never dollar for dollar. If you want a dollar for dollar, we talk about tax credits. If you are trying to, well, what's a credit? Like the child care tax credit or the EV credits or the solar credits, all of those are credits dollar for dollar. You get $1 credit, you reduce $1. But otherwise, we're talking deductions, expenses. And the overarching way of running your business in America and the tax law around it is that it also has to be ordinary and necessary. So in order to run your business, you had to have spent this money in order to make it work. So we can't just go buy a giraffe for our business because we want to deduct it. That's just not how it works.
Yes. And I think that people really get confused and try to think that there are some really big expenses they can throw into their business finances. And yes, it is a little bit more complex, right? We do have assets and businesses that are treated differently. So if you just go buy a truck, it might not result in 100% of an expense for that year. There's some complex stuff we can talk about around that. The deduction piece is important to keep in mind. And just to clarify kind of what you were saying there with the credit. So if you owe $3,000 in taxes and you have a $2,000 credit, now you have $1,000 that you owe in taxes versus if you spend $3,000 in the business, you're not going to get $3,000 off of your taxes.
Right. You probably just reduced it by 1,000. A big one. So if you ever go out onto the TikTok, Instagram world and you see, I saved my clients $10,000 in taxes, you can do the math in what had to have happened. Because again, there weren't likely credits involved here. Maybe some technical stuff, but let's just go big picture. You had to have found $37,000 of expenses that the client didn't know about, that you didn't keep books on. That's the part that always will baffle me as a professional as I sit there and I'm like, well, how did you as a business owner not realize that you spent $37,000 throughout the year? And a lot of those were amended returns. So they went back in time and they're like, oh, I magically found all of this money. To me, it's magic. They will have a process, but
Yep.
I'm like, really? You have really bad bookkeeping. It would be a lot cheaper to just find some good bookkeeping if that's the case.
Yes. Yes. All right. Let's talk about where people go wrong. What are some of the traps in this write-off thinking?
I think it's buying stuff that you don't need because it's deductible. And we're all as humans, I think, subject to that of oh, but I should get that. But again, we've now taken cash out of your pocket that you could have used to invest. I think it's financing debt. We talked about this in our last episode. Debt can get a lot of people in trouble. And so when you want that car and you go on 1231 to go get the big car that's going to qualify for Section 179 and you deduct it that year, well, now you have this huge loan to pay for. And little known knowledge, if you don't maintain your business use high enough, you have to go and take that back and take those expenses back and pay taxes on them. So that sucks. And then if you forget about just your ongoing costs, your insurance, maintenance, interest, payroll pieces, and you're spending money that you actually need in the future, it's really problematic.
Yes, it is not as simple as just buy this thing now to save taxes this year. You're making a commitment. It's like buying a puppy.
Yes.
You're making a commitment for hopefully longer than the 1 month that you have the puppy at Christmas. Hopefully you're adding them to the family for the long term. And that's what some of these investments in your business are like too. And so it's got to be worth it in the long run to have that strategy.
And I think to me also the funny part is that not the funny part, but the part that seems not sexy and not appealing is retirement's the number one tax savings vehicle that benefits you now and you in the future. Almost everything else has to involve you giving money to someone else. And if that's the case, I'll give you a tip. I will take it. You are welcome to pay me an exorbitant fee to do your taxes. If you don't want to pay the taxes on it, I will. Because again, and when you think about it that way, suddenly you're like, well, I wouldn't do that.
Yep.
Why are you doing these other things? So I think if you think about it that way, that Seanna and I will happily take that money and pay taxes on it if you don't want to.
Yeah, absolutely. If you just come to us and say, I'd like to 4 times my fee this month so that I can lower my taxes, don't mind if you do. No. Sounds good.
So there are smart ways to do this. And retirement to me is the number one. Let's pre-tax it. The financial advisors will come out and yell at me for that. It's taxable in your future, but I can't predict future tax law. So take your deduction now if it was me. But that's a big one to me. And then there are smart ways to do things, of course, that just have to go along with I want to grow my business. Can you hire your kids to come do stuff in your business? Because now you're still helping your overall family income by keeping stuff in-house. Can you hire your spouse? There's so many other ways to do it that's not buying a truck you don't need.
And let's talk a little bit about this because there are times where I don't want to, I'm sure there are people that are offended right this minute that are like, well, I make some investments in December because I've looked at where profitability is and it just makes sense.
Yes.
Let's talk about that. When is it smart to time those purchases? What does that look like?
Yeah, we actually have had a kind of period of time in the last 3 years as we've seen bonus depreciation go down. So what we've had those conversations in December is, hey, you do need big equipment purchases in the next year or two, and you have the cash to do it now. Your tax benefit's a lot greater to do it this year. There was a period of time where we were flipping from 100% depreciation to no depreciation and then back. And so those were, again, times we were playing that game of it makes sense to do it this year on a very individual level. So if you're not even running a business, charitable contributions were one of those where, let's say you're a family who continually tithes 10%. Actually doing 20% one year and 0% the next year can have better tax benefits. And so those are the things to think about is what would you have already spent money on? What was in the forecast, in the plan, in the business? And now let's talk about how it makes sense tax-wise to do it. I think at the forefront has to be, what does the business need? And second decision is, okay, now how does it make sense for taxes?
Yes, absolutely. I love that. So you talked a little bit about retirement accounts. What are some of the best things out there for people to lower their taxable income. We see all sorts of shiny objects talked about again on social media. So from your standpoint, what do you think?
When it makes sense, the SEP or the 401k and the solo 401k, if you have employees, it's a 401k. It's a little rougher, as we know, with employees, but if it's just you, that solo 401k allows you to put so much money away.
So much.
Yeah, and if you just have this like huge cash position, this is the time to do it. So that's really one of my favorite ones. There's smaller ones like accountable plans and stuff, but you have to know that for most things, like there are hoops to jump through. So if you want those deductions, you're going to have to do the work for it. And that's where I see clients kind of fall apart and be like, that $300 is not worth that effort to me. And that's okay. Like you get to make that decision and say, it's fine. I'll just give the IRS $300 more this year because my time was worth $600.
Yes. And I think there's a whole episode around the mindset of paying taxes and money mindset that has to come from here, but I won't go down that rabbit trail right now.
Yes, and there's like a whole episode to be dedicated in our future to like what an S corp is. Those are super popular and another like way to save taxes, but there's so much detail to like how it makes sense and what you could actually be harming yourself with. So we will do another episode about that, so continue to listen.
Yeah. All right. So we are going to wrap it up here to keep these short and sweet. What is the main thing that people should remember when they're thinking about a write-off?
That it is that is a deduction. That's what I want you to remember, is that it's a deduction and it's not a one-for-one tax savings. I really need you guys to remember that. Also, just so you can have better conversations, like not even anything else, but like you can just have a better conversation with your tax professionals.
Yep. Yeah, we want that spending to make sense in the business and that you would make that decision regardless. You might just have a timing difference in it and make it this year.
And taxes are really just about the timing and the planning of it. It's okay. And I guess give yourself permission. It is okay to pay taxes when you need to build up your cash reserves. And we're in a time in the economy, I think Sean and I would both recommend to businesses to make sure your cash reserves are solid. So that probably means a few extra taxes this year. Just plan for it.
Yes. All right. We hope you guys enjoyed this episode. You can check out the show notes for places to follow us, and we'll see you in the next one.